Pour continuer cette matinée, une question.
So to continue our morning's discussion, a question for all. Are these advanced countries going to remain like that? There's a lot of challenge there, environmental, technological, and demographic as well. So in the next roundtable that's going to come up, let's discuss it. So we'll have Ruben Nizard with us, and he is in charge of sectorial research at Coface.
Merci Stéphane.
Thank you so much, Stefan, and good morning, everybody, and welcome to the second part of our morning's program. And indeed, it'll be focused quite a lot on the decline, the fall, which has become so important in most advanced countries. Now, if you listen to the investiture speech of Donald Trump just a few weeks ago, he was saying particularly that during his tenure there would be the end of a long decline of America. Now, in Europe, several speakers have mentioned that there's this idea of regression in competitivity and therefore an irreversible downward trend on the continent, which has now become central everywhere in the Draghi reports and other reports that were published last year. Now, this is not just about advanced countries in the West, because in Japan, where demographic stagnation is a reality, this is also a subject. So here we have prospects for rich countries, and we wonder about the so-called rich countries in Europe. What's going to happen to them? As Stefan just mentioned, this group of countries is running into a certain number of economic and social challenges which might shake up their role in the world hierarchy. To start with, the major issue is demographic. In just 60 years' time, we've seen the fertility rate within the OECD divided by 2. As a result, that today it's virtually all these rich countries, this whole group of rich countries, which is now running below the renewal rate. So you know what the results are: aging and a drop in the number of working people, the working population. So this leads to other trends, and that creates a lot of pressure on our retirement systems, our health systems, and obviously on our employment markets. And given this trend, we feel that this is likely to get worse. Of course, solutions seem to be quite obvious, and it was mentioned this morning, and that would be to boost and improve productivity. But here once again, and we need to know if AI robotizing would enable us to step out of this rut. So far, the trends are not very encouraging in these last few years in advanced countries, because we find that instead of increasing, productivity is dropping. Let me give you an order of magnitude concerning these challenges. And given the present demographic trends, we would have to double the rate at which we make productivity gains just to maintain the present standard of living. And for us, this is the challenge, and that's going to be the leitmotif today, is the economic and political fragmentation at a worldwide level. And that is a huge subject, especially when it's happening in developed countries. When you look at strategic issues like industrial policy, energy transition, and technology, each country is just fighting for itself. So there's a lack of coordination, and which increases competition rather than cooperation. And this might lead to an overheating, which would naturally lead to winners and losers, and which would also bring in this risk of a collective loss for all of us, a joint loss. And so this brings us to the next question. All advanced countries, will they remain advanced?
Will be held in English. Thank you again for joining us. I will now invite my colleagues of the Coface Economic Research Department to join me on stage. So here today with us, we have a group of economists of the Coface Economic Research Team coming from across the world. On the right of the stage, you can recognize, if you were here last year, Bernard O, our chief economist from Asia Pacific, based in Singapore. Next to him is Jonathan Steenberg, our economist based in London, covering the UK, Ireland, and the Nordics. Next to him is one of our economists covering the euro area, especially focusing on Germany, the one and only Christiane von Berg. And finally, we have next to me Marcos Carias, our economist for North America, based in the US. So Marcos, I think I'll start with you. I mentioned it at the beginning of my introduction. Donald Trump mentioned that America's long decline was over. But there's a paradox when we look at the data in the US, and that has been mentioned by Jean-Christophe. We see resilience and even strength in the economic performance of the US in recent years.
Yes, indeed, Ruben. If you look at the data, I mean, you're amazed about how well-oiled a machine the American economy is. It's very performing. To cite some figures, GDP per capita, so this is GDP per everybody there, people, is 10% higher compared to 2019 in the United States, against only 2 or 3% higher in Japan in the euro area, and it has even declined in some countries like Germany or Canada. So some of that might be a little bit overstated because it's not as easy to count how many people there are in the United States, just the amount of people that have been pouring in and everything. But even then, it's a very big number. So I don't think that it changes the reality that is a very productive economy. So you have to ask yourself, why is this the case? Of course, there were a lot of explanations that pointed to the very generous policy support that you had in the United States, stimulus checks, industrial policy, very loose monetary policy after the pandemic. So yes, this ensured that we did not have a demand problem like we had in 2008. But you also had a lot of stimulus in Europe, and the story afterwards was very, very, very different. So I think that the thing that we got to focus, and it's been cited before today, is productivity. Because the gist of it is that here is where the United States has been blowing past everybody else. We're going to get later into the details of why, but this is really the thing that we got to focus on.
Yeah, we'll keep that in mind. Productivity is really a key word we'll focus on a bit later. You've also mentioned it. There's been a big difference in recent years with Europe. And of course, there's a striking difference with Germany. JC last year referred to Germany as the sick man of Europe. And indeed, we've seen challenges grow in Germany. Christian, how would you assess these challenges and their implications for Germany's leadership in Europe?
Leadership, Ruben? Really? I mean, thank you. Well, I mean, it's quite obvious. Germany is the industrial hub in Europe. And I think it's quite obvious that with the green transition that we all obliged to, it has quite a lot of growing pains. And we feel it directly. I mean, we have extremely high energy costs, given that gas prices shooted up. And at the same time, we abolished nuclear energy. Unfortunate timing, I would say. Then we have we have the US and China as our main trading partners, and both of them are at a trade war since 2018, I would say. So we are in the middle of all of that, and we have quite a high bureaucracy, and then an automotive sector which produced past the demand. Come on, guys. So we are in the middle of a perfect storm, and when we are talking about leadership, at least in growth, unfortunately, do not look at us in Germany, look at Southern Europe, Spain, Portugal, who showed really tremendous growth rates lately.
Yeah, so we'll go deeper into that a bit later, but first I'd like to hear everybody. And Jonathan, you're up next. Jean-Christophe announced earlier that we were upgrading the UK back to A3. So my question is simple. Is the UK back after a difficult Brexit transition?
I would love to just say a straight up yes. I think I'm going to say a gradual comeback is more appropriate. The economy has slowly found its post-Brexit footing. There has been some, let's call it political turmoil. I think we can accept. But fundamentally, I do think the UK economy has a lot of strength to it. has fantastic education, specifically its universities. It's great at attaining international talent, competitive business environment. It has mainly focused on sort of higher end manufacturing, especially around Oxford, Cambridge. And it's a really strong service sector. And I think, these days, that's not something you should underestimate. And I'm not just talking about its financial sector here. Legal sector is very strong. It's really good when it comes to consultancy, has a really strong entertainment sector. So it's an economy that still has a lot going for it there. It's not all good news. I think its public finances are similar to, it seems, most European countries, questionable at times. And we have some issues with productivity and investments, but no, a gradual comeback.
Okay, it's good to know. I'll stay with you, Jonathan, because I mentioned it. You cover the Nordics, and there's a bit of a different story that appears from continental Europe. We often see Nordic countries as being models. Is it really the case?
Again, I'd love to just say a straight up yes here, but the Nordics, they do have a lot going for them. They still have quite healthy public finances, unlike most European countries, usually operate with trade surpluses, has a very flexible labor market, highly educated workforce, very, very leading in digitalization. And they have, historically speaking, focused more on sort of higher end manufacturing where they're still competitive. So that is some logistics sectors, it's pharmaceuticals, it's telecom. So I think that's a key difference. And then I think, to be completely honest, we also have a lot of natural resources. And these days, that does help. So I think the last one's probably also one to keep in mind.
Yeah, and we'll keep in mind that issue of energy and access to energy being a key point. But to just finish this first round of questions, Bernard, I turn to you, and I'm going to ask you a very simple question. I mentioned Japan, but beyond Japan, does the notion of economic stagnation in Asia-Pacific holds true?
Well, as you alluded to in your opening remarks, economic stagnation is a long-standing and well-known problem in Japan, and that's for a few reasons. But Asia-Pacific is a very dynamic region. So apart from Japan, even among advanced Asia economies, you include South Korea, Taiwan, Singapore, Australia, and New Zealand. There is a diversity in terms of the growth rates. So if you take, for example, South Korea and Taiwan, they are pretty much plugged into the global technology sector. So when global technology sector does well, they tend to do well as well. But they also face economic issues. For example, they are quite reliant on a few key sectors to drive economic activity. They also have a very weak wage growth. They also face aging populations. So, and I think some of you may be aware that South Korea recently has a little bit of a political crisis going on. So all these, affects the growth, investment activity, and so on. And Singapore, where I'm from, we are very integrated into the global economy. Our trade value is about 3.5 times the size of our GDP. So when the global economy does well, Singapore also does well. And to give an example, last year, global trade was quite resilient. So Singapore's GDP was 4%, which is pretty good for an advanced economy. Hong Kong, in the case of Hong Kong, its fate is really tied to mainland China. And China is facing a structural economic slowdown, so it does not really bode too well for them. So I'm afraid there's no straightforward answer to your question. There are winners and losers in my part of the world, especially, we are in a new economic and geopolitical environment.
So winners and losers, we'll get to that. That's the whole purpose of this roundtable. But I stay with you, Bernard, because you mentioned Japan and the struggles that they face for different reasons. One of them is demographic trends. And we see often Japan as a preview of what is going to happen to the rest of advanced economies. So can you tell us a little bit more what happened in Japan, what measures have been taken to try to counter that trend?
So Japan started confronting the problem of aging population over 50 years ago, since their fertility rate fell below replacement levels in the early 70s. So they have a little bit more time, I would say, compared to many advanced economies to tackle the problem. So they really approached the problem of aging population in two angles. The first one is they try to boost the birth rates. They try to increase or at the very least slow the decline. And the second is really to manage the impact caused by an aging society on its economy. So on the first part, they did things like they improved parental leave benefits. So for example, new mothers, they receive now more of their regular salary when they're on leave compared to the past. The take-up rates of parental leave among fathers has also increased, and these modest changes does have a dramatic impact, especially on the women labor force participation rate, which incidentally also helped to mitigate the problem associated with a shrinking labor force. On the second part on mitigating the impact, they have done things like raising the retirement age, helping the older people, making it easier for them to find work, improving the recruitment of immigrants to supplement the labor forces, and also to step up efforts, to retain these immigrants, especially in, I think, sectors that face manpower shortages like your healthcare, your construction. So there are some successes on that front. I would say that Japan has probably helped to slow the impact of aging population on the economy, but they haven't really overcome the problem. So I'll say that it still remains a severe challenge for them.
Well, it's good to know that at least there has been some progress. I noted also that you mentioned raising retirement age as a possible venue. We'll think about that in France. But first, I turn to Germany, because, of course, when we think about demographic declines, at least when I think about it in Europe, Germany is always a case that comes up. So, indeed, that appears to be one of the main challenges also for Germany, and one of the structural challenges that I don't think we mentioned it yet.
Yes, thank you. I haven't mentioned it yet, but now we know, Ruben, thank you. Well, when it comes to demographics, I think we have all the same challenges. It's all about that the retirement age is probably too low, France, but also that we are getting older, that our pension system gets into trouble, especially in the 2030s, when the last baby boomers are in their well-deserved retirement, and that we are getting older. But if we are looking at the measures, unfortunately, Bernard, in Germany, we know parental leave quite well now. So that's not a thing. And also, if you look at kindergarten, that's really a German word. So if you're looking at Coface Germany, for example, we have an own kindergarten just for our kids. But the main change is coming from a different direction, and that's interesting. So it is obviously immigration. And in Germany, that means mostly refugees. So from 2015 on, I remember we were 80 million people. Now we are 84.7 million people. And especially young people are coming to us, which obviously can then contribute to the society really well. I mean, integration, I think everybody knows it in this room, is costly. It's a lot of work, and sometimes it fails tremendously, looking at the attacks in Germany in the last months. But the good thing is there are so many other positive cases, and I'm so lucky that I am at Coface Germany, where we have many people integrated with refugee background who are tremendous, cool, intelligent, funny people who really are part of our club, and I really do not want to miss them anymore.
Yeah, so interesting that you mentioned immigration, and then indeed there are some challenges that we'll get to. But first, I want to hear a bit of a positive story. And you alluded to it in your primary remarks, Marcos. In North America, we've seen an immigration surge, but there has been some positive spillovers from that, from an economic perspective.
Absolutely, absolutely. Workers are an essential input to the economy, the American economy. There's so much demand, it's growing so fast. And the fact that there's been all these people coming in, harvesting fruit, building, construction, valuable work at a very reasonable price. It definitely allowed the American economy to grow the way that it has been growing. So that was a very good story. But we have to also notice, as you alluded to, Christian, that there is difficulties with integration. And this is not a recent thing. I think these are things that have been brewing in American society for a very, very long time. Very evident since the first Trump presidency, at the very least. And I think it's a country that is really in a very intense debate about whether or not it wants to be an immigration country, whether or not it wants to be an open society. Even within the Trump coalition, you saw Elon Musk being very supportive of qualified immigrant visas and being met with a lot of criticism from the more nationalist wing of Trump's coalition. And most of all, just in the last few weeks, I live in New Jersey, and close to where I live, the immigration enforcement forces have been starting to carry out the deportations. There's been a lot of questions about how big this is going to be, but from the anecdote, from the story, we already know that, for instance, they come into places of work. They're pointing out, people who look Latino, and they're taking them without a lot of showing warrants or whatever. And in Newark, they took people who were American citizens, even one person who was a veteran of the U.S. Army. So I think this gives you some indication of what's the mindset. And I think this kinds of things is going to create a lot of tensions in American society. I was also looking at a news report in Queens, in the Latino neighborhoods. Small business owners very worried because business was going down, because obviously a lot of undocumented people, they're starting to hide. They're going underground because I think they know what's coming. So I think we're in a tense period with this. And going back to the economy, well, yes, if it continues growing the way that it has been growing, and I think it will because of the demand, because balance sheets are healthy, it will continue to need them. But if they get deported, if they come less because they know that it's a less welcoming environment, then that's going to mean more inflation.
So yeah, there is a social and political cost to immigration, and we've seen shifts in views of immigration. It reminds me of the case of Sweden. We mentioned the refugee crisis with Germany in 2015, but since 2015 in Germany, in Sweden, we've seen a lot of changes in the way immigration is viewed due to these social and political issues.
Yeah, I think the Sweden case is probably more similar to Germany than to North America. It's mainly been more on the asylum refugee than necessarily only economic refugees. And yeah, up until 2015, there was some really strong positive immigration trends, which also means that if you look at the demographic outlook for Sweden, it's a lot better than many other European countries. Its dependency ratio outlook is even in the next 5 years slightly improving at times. Labor shortages has been less than other places and less labor hoarding. So again, from that economic point of view, there is a positive dividend. But what we've seen since 2016 is a dissatisfaction, which I'd say come down to, yes, a lot of people, but also an insufficient immigration policy, where we have since that seen a shift towards the right as crime rates went up, as there has been an inability to really integrate people into the labor market. And I think that is a key point. Sweden has the biggest difference between unemployment rate of people from Sweden, native Swedes, and immigrants. That's the biggest in all of Europe. So this ability to get people into the labor market has just not been there to the same degree as you see in, for example, the US. And that has had consequences. Net migration has been falling, and there are discussions right now of changing citizenship requirements, maybe even backdated. So they're definitely taking it serious, and you can see it, and the outlook for 5 year plus is not as strong as it's looking in the next 5 years.
So demographic trends are not cooperative. Immigration is not an easy fix and an easy solution to implement. So then the only solution, and I mentioned it in my opening remarks, is productivity and boosting productivity. But there again, that trends are not excellent, to say the least. And Germany, in particular in recent years, we've seen productivity growth lag. So maybe Christian can tell us a little bit more about this, and is this irreversible?
No, probably not. Irreversible, it's not. But actually, it's not a German thing alone. It is more a European one. We have seen that given in real labor productivity per hour, it is declining in Europe since 2023. In some countries like Belgium, like Italy or Estonia, even since 2021. And one of the reasons was already named here in this group. It was that we have a deindustrialization, so the manufacturing sector is shrinking in Europe compared to the service sector, which needs less technology and therefore has less productivity gains. And the other thing, there is JC. I mean, JC is really worried about the education in France and in Europe, and that could be also a reason why our productivity has shrunken. But if I'm looking at Germany, we have three main factors that we are discussing in Germany. One is our lack of digitalization. I mean, if anybody here is from Germany or went through Germany to get to this conference, you would have recognized that Wi-Fi is not an option. No? I think that says everything. The second one is excessive bureaucracy. And I mean excessive. I know everybody is complaining about it, but the IFO Institute in Germany has estimated it versus our European peers. And the costs of it are, and now hold on to your seats, 146 billion euros per year. That's 3.5% of our GDP. I mean, think about it. If we would invest that into our defense, Donald Trump would be really happy with Germany. I mean, for once. And the other thing is, we are more people in Germany. There are more people employed, but they are working less. Do not believe this tale of the busy German. That's not true anymore. Sorry. I do not speak about Santa Claus today, don't worry. It's really that more people are on sick leave. We have a tremendous increase in mental health issues. There's a lack of motivation. We are paralyzed, just as our economy. And that's, I guess, a main threat to productivity. But I guess the Brexit, Jonathan, has not helped either.
No, I'd love to blame everything on Brexit. I'd like to just start by saying that Coface is obviously the exception to productivity. We are increasing year on year, so let's just get that one out of the way. No, I mean, in the UK, we can echo a lot of what you've been saying. A lot of discussions around regulation, bureaucracy, increased sickness has been a big discussion in the UK. And while we can blame some things on Brexit, I think we need to be honest and say fundamentally there were a few issues beforehand. Slowing productivity growth has been a thing in the UK for decades. It was kind of masked before the global financial crisis by a strong financial sector, but if you sort of remove that one, it's been decreasing for ages. There are several reasons for that. We can go for demographics, but it has a big service sector. I think maybe going forward, that might not be a weakness, but from a productivity point of view, that has meant it has had a slower and falling productivity. There is some signs of inefficient management. I'm sure some French people will laugh at that, but that mainly comes down to more family-run businesses that are inherited down to the kids, which isn't necessarily the most efficient way of doing management. Where we can blame Brexit is through three different avenues, I'd probably say. Bureaucracy. I won't go into details, but there's been a big increase in that, and we've seen a lot of SMEs in the UK just saying, we don't want to export anymore. It just doesn't make sense for us. The second one is business investments. After the referendum, they took a break. They went to Malaga and didn't come back for a few years. And that is having a quite severe consequence now. And the last one is down to labor. So labor hoarding has always been a thing in Europe. It's to a larger degree been a thing in continental Europe. But since you already shrink the labor force, we have seen more labor hoarding in the UK. And when we see a slowing economy, that has a very direct negative impact on productivity. And then lastly, which is an obvious one, smaller labor pool means you have less candidates to choose from, which means you won't necessarily choose as good a candidate as you would have if you'd had a bigger labor pool. So I think, yeah, we can blame some things on Brexit, but sadly not necessarily everything.
So we heard about Europe with you, Jonathan and Christiane, but if we go further east, we've also seen some Asian countries struggle with productivity in recent years. That has been the case with Japan and South Korea, for example. Something that is a bit at odds with the story of them being leaders in automation and robotics.
So I think there's no myth about a busy Japanese or a busy Korean, but maybe there's one for busy Singaporean. So indeed, Japan and South Korea has experienced relatively low levels of productivity, and I think that's because of a variety or combination of reasons. The first one, obviously, a clear one will be the aging demographics, but labor market characteristics are also responsible in these two countries. And within these two countries, the labor market is quite rigid. There is a very strong emphasis on seniority-based system progress within the company. There is quite a bit of inflexibility in work practices, and there is now increasingly a larger proportion of people working non-regular work. So that means that they don't have permanent contracts. And these trends provide very few incentives for them to have the desire to want to excel or to upskill themselves or to change jobs, because maybe they don't really see a point in doing all of this. And there is also very limited investment in innovation and digitalization, maybe the same as Germany, as Christian mentioned. So that affects labor productivity. But I would also say that there is a divergence in terms of productivity trends across sectors. So for Japan, the manufacturing sector does see productivity gains. But when you look at domestic services and non-manufacturing sectors, they have really fallen behind in terms of productivity gains. And I think the reason for that is really, or partially, because of automation and robotics, which is deployed to very strong success in key manufacturing sectors of Japan, like automotive, electronics. But other industries that do not adapt well to having automation, or smaller businesses that simply don't have the capital to invest, to make such investments, they continue to struggle with boosting productivity.
So yeah, some of your comments are linked to what Jonathan and Christiane said on the disconnect between productivity gains in the manufacturing sector and in the services sector. But I'm getting back to you, Marcos, on this issue of productivity that you mentioned in your first remark. You told us that that was the main difference between the US and the rest of the world when it comes to overperformance in the COVID recovery. So any explanation for this productivity overperformance of the US in recent years?
Probably the interaction of several forces. I would just like to really drive the point home of why we're talking so much about productivity. Productivity is really the secret sauce that allows societies to be wealthier and to feel wealthier. Because if you're just growing because you're growing the population or because you're making more factories or more buildings, you're growing in size, but you're not growing individual incomes. Productivity is generating more income per person, and that's what allows them to feel good, feel wealthier. So in the United States, we have several things going on. Christiane, you said that there's not a lot of digital investment going on in Germany. That is definitely not the case in the United States. And again, just from what we know, our company, Coface North America, is really made some investments to increase coverage by building this digital infrastructure that allows us to have people all around the United States. It's a very, very big territory and all around the region. So really, you had a lot of productivity coming from this. There's also AI. It's not going to happen from one day to the next, but it is starting to have its effects. And then something very interesting is the labor market. Again, something very interesting happening in the labor market in the United States. And we're going to take a trip back in history and go back to the days of the pandemic. You guys remember, in April, March 2020, it looked like the world was going to end everywhere. And countries went about it in a very different way when it came to protecting the people, protecting workers. In Europe, there were these furlough schemes, of course, that focused on protecting income, on protecting labor contracts, on preventing layoffs, by helping companies subsidize employment. In the United States, there were a lot of layoffs. Massive layoffs, but the government focused on protecting incomes, on distributing stimulus checks to the population. So you had a very acute spike in unemployment, but what you did not have is a loss of faith in future demand. So very quickly, companies had to get to start hiring again. And what happened here is that there was a massive reallocation or reshuffling of labor, and a lot of that happened in the direction of higher productivity jobs, in the direction of the tech sector, services sector, because there was a tight labor market. Also, companies had to invest in their workers, in their education. So this is a big issue, a big phenomenon that hasn't been as discussed. Finally, also in the United States, I think it's well known, but you still have to mention it, energy. They have a lot of it, and other advanced economies don't, so that's important. So those are, for me, like the big things that explain this divergence that we were talking about.
Okay, that's very interesting. And on that note of US resilience, US exceptionalism, we've also seen the US embrace protectionist measures and industrial policies like the CHIPS Act, the Inflation Reduction Act, of course. How have these policies impacted the US economic resilience, and are they a model for other economies?
Yes, so they're focusing with these legislations to really rebuild and repatriate the capacity for the very important strategic stuff, things with military applications, chips typically. And this is very good, and there's been a lot of movement here, and it's going to be very good for their economy, but they also have to be cognizant of the fact that that's not going to allow them to manufacture all of these goods, that consumer goods, durable goods, things like these that they import from the rest of the world. I mean, they have car companies, but they're not the most efficient car companies in the world. I mean, Tesla, it's a good company, but it doesn't make the cheapest electric vehicles. And this is not something that you can build very easily. This is not things that you can build very easily at all. These are good things. These are good ideas, but it's hard for them to pull it off, and I can imagine that it's also hard elsewhere.
Yeah, and it's hard, notably in Europe. Christiane, right? Do you think the EU can match the scale of the US initiatives, or are national divisions holding us back?
Yeah, I guess first we need to organize it. So, I mean, it's quite obvious. The United States, they have one president, one fiscal policy, and two parties. And look at Europe, 27 nations, several different leaders. I don't know how many parties, and everybody can only agree that they cannot agree. So that's the situation what we have here. The other thing is, do we have the scale to invest? That's quite hard because, I mean, it looks like the United States are shooting up, but if we're looking at the manufacturing sector, it's only 10% of the gross value added that is industry. And if you're looking at Europe, it's 15%. And if you're looking at the Czech Republic or Austria or Germany, it's 20% and even more. So we need even more to invest to have the same impact. And if you're then looking at our internal rules, financial markets reactions to our fiscal scope, I mean, we are here in France. You know, there is not so much financial power here to spend on to support our industry sector.
Yeah, so not a lot of fiscal space in France and in a lot of other European countries, but in Germany, it appears that there's a bit more space to invest. Can we expect any meaningful change after the election? The same question was asked this morning to Famke and Jean-Christophe, so I guess you're going to echo a lot of their remarks.
Don't worry, I will not disagree with you. I am with Famke. I mean, first we have to see what the results of the election are. The problem is we have several very small parties and we do not know if they get into the Bundestag. We have a 5% threshold, and if they get into it, it gets quite complicated. But I mean, what you probably ask for is the famous Schuldenbremse, the debt brake. And for that, you have to know it's part of the constitution, and you need a 2/3 majority to change it in the Bundestag. And it will be very hard to get this majority. So please do not count on Germany.
Okay, thank you. Turning to the UK, post-Brexit, they've taken steps to reposition themselves globally. Are we seeing a current strategy emerge now from the Brexit mess, or are these efforts falling short? And my other question is there a risk of a competition with the EU that would lead to inefficiencies in Europe and in the UK?
It always feels dangerous to comment on post-Brexit messes, but there is an industrial policy materializing. We saw this strategy last year. We're expecting to get the actual policies this year. And I will say a lot of the things they highlight are the good things. It's investments, it's retraining, education, so there's a lot of good stuff. I think the fundamental question will be the funding, because what we're seeing right now is not sufficient, definitely not to be competitive with the US, potentially not even to be competitive with European peers. So I think the funding question is a big one. Will there be competition with the EU? I just want to highlight a few sectors that the UK came up with. Advanced manufacturing, clean energy, defense, tech, and life sciences. Have you guys heard of these before? Because I think everyone here will go like, we're doing those ones too. So yeah, there will definitely be some competition there. I think the good thing from a UK point of view is there is competition with the EU as well, and I think there's room for collaboration. Sectors such as defense, supply chain, energy, life sciences, where we already have pan-European companies, there will be room for some collaboration there as well. But yes, there'll also be some competition, definitely.
Yeah, and same question for you, different than the Brexit, of course, but in Asia, we see the renewed push for industrial policy, although it's historically state-driven strategies in Asian countries, and particularly in Japan and South Korea, are pretty common. We are seeing also these same sectors being targeted. So are we seeing this renewed push and risk of competition emerge in Asia?
Well, yeah. You're right. Industrial policy is not new to Asia. In fact, it is quite instrumental for economies like Japan, South Korea, but also Taiwan and Singapore to catch up to the developed world in the past. And there is indeed a renewed push. And the reason for that is Asia is responding to the geopolitical competition in the world and also changing economic environment. And there is also a realization and awareness of the vulnerabilities that comes with global supply chain disruption as experienced during the pandemic. So, for example, Japan is engaged in a multi-billion-dollar industrial policy and to revive, and their aim is really to revive the stagnating economy and to sort of reposition themselves as a technology innovator. South Korea, likewise, also have a new industrial policy. They are focusing on transforming some of the key sectors within the economy, such as your automotive, semiconductors, shipbuilding, batteries. And I think Australia, they themselves, usually they don't really have a very strong industrial policy. They too have jumped on the bandwagon. They have implemented a $15 billion plan called the Future Made in Australia. And for them, it's really to position Australia as a key player in the global supply chain, especially in the areas of critical minerals, advanced manufacturing, and renewable energy as well. So the things that Jonathan has mentioned. And in terms of whether there's any competition, I think it's not really a problem at the moment. Asian economies, they traditionally have a role to play within the global supply chain. So Taiwan is traditionally strong in advanced manufacturing, especially in semiconductor manufacturing. Japan has a presence within the global semiconductor sector. South Korea as well, they are strong in memory chips manufacturing.
Yeah, so some degree of specialization that prevents some of this competition, if I try to summarize what you just tell us. Marcos, speaking of competition, there has been a lot of debate over the Inflation Reduction Act and its impact on other economies. So my question is, do you think such policies risk undermining collaboration? And of course, with this new administration, things are changing fast. So how do you see the future of cooperation with the US in the coming years?
So yeah, there were debates about how these industrial policies were unfair competition and so on and so forth, and they can be interpreted that way to some extent. But I think what's really doing the bigger damage right now is what's going on with tariffs and tariff threats and tariff imposition, because the aggressiveness with which they're going about this really is not setting a good mood. And is doing a lot of damage to the reputation of the United States, to the United States soft power. Just the disregard for, even if tariffs are walked back, the disregard for trust, in business is so important. You look at a country like Mexico that's bet so much on nearshoring. Now they don't know if they're going to have a development model now. So really, and same thing with deportations. Just the crass way, really, in which this is happening. I think that it's America's standing in the world is really at risk here, and so really globalization was built around the United States. So I think everybody out there in the world is really wondering, how reliable of a business partner this is.
We heard the US perspective, and I'd like to hear you, Christiane, on the European perspective, because Europe appeared as one of the main collateral victims of the policies of the previous administration, and with this new administration, it appears more like the target of the next administration. So what are your thoughts on this development and the future of cooperation, particularly transatlantic cooperation?
Yeah, I definitely see that we are a direct target by now. And that means we have to think a new strategy in Europe, although it's not really new. I mean, I think we should really concentrate on our strengths, which is for me research and development, and especially international cooperation, because that's something that we're quite good at. Think about Airbus. I mean, Markus, how many planes has Boeing sold in the last years? So I would say, I think it's quite hard right now for Europe, but we are definitely not off the record here.
Okay, good to know. A bit of optimism and European pride. Just to continue on the optimism notes, are there any lessons that we can draw from the future? We discussed when we prepared this front table of the example of Sweden in the 1990s that was facing a major crisis. Is there any lesson that we can draw from that example? Any positive that we can get from this example?
I think the main headline back then was a 25% devaluation of the currency. So if we did that, I think from a competitive point of view, it'd be pretty good. I'm not sure we can replicate the direct things, but what I think we can learn is comprehensive choices, policies, intervention. They do matter. And what we saw after that was, in addition to this, it was deregulation, it was adoption of new technologies, it was reform to the business and the labor market, it was tax and spending policies that weren't necessarily popular. But in order to change things up and fundamentally actually really restart an economy, you need governments, politicians who dare to do these things, who actually dare to have the political will and capital to say, we will make some fundamental changes to fix the fundamental issues.
So again, looking at the positive, and I heard you mention that, Marcos, on productivity, you mentioned AI and its potential. You strike a slightly different tone than Jean-Christophe a bit earlier. You sounded a bit more positive. Maybe you can tell us a bit more about your view on the potential of AI to boost productivity in the coming years.
Yeah, no, you really speak with people who are implementing AI at the more forward-looking organizations. It's really very immediately evident to you that it's going to make so many things so much more efficient, and even in terms of innovation. The only thing is these things, they take a little bit of time to trickle up to the macro level, because also, I mean, people may underestimate the speed at which it extends to the rest of the economy, because for things to go macro, they have to be like general at the level of the economy, and there are a lot of people who don't know what to do with the technology. It takes time to implement. But I do think that over the long run, this is something that is going to be contributing. A good parallel is the internet. You know, we had the technology for the internet since the 80s, even 70s, but it did not become an economy-wide thing until the 90s and the 2000s.
Okay, so some positive again. And if I try to wrap things up at this stage of the roundtable, because we're nearing the end of this discussion, we are seeing a great deal of divergence in the stories, which makes the title of our roundtable very relevant. We hear a more positive story, and there are reasons to be positive on the trends in the US. A lot of challenges in Europe that are making things difficult, but also some reasons for hope. And we see that some more specialized economy can, and especially export-oriented economies are doing a bit better, notably in the Nordics or in Southeast Asia. So there are some signals that some countries are doing a bit better, but that is if they avoid competition and all going into the same sectors. So before we conclude, I just would like to go around the table one last time to ask you to give us your outlook for 2025, more of a near-term view. So I guess we'll start with you, Christiane. What is the outlook for Germany in 2025?
Okay, take all the weaknesses aside that we just talked about. It's really, we have the ingredients for a recovery, for a cyclical recovery. We have quite a strong wage growth with moderate inflation, so purchasing power is coming back. We have lower interest rates. The ECB just decreased the interest rates again, and there will be more cuts in this year, down to 2%. We have fiscal room for maneuver. We can invest, but the main important thing that we need in Europe is confidence. There is no confidence. We really need confidence. And if this confidence is coming back, and if it gets a little bit more political calmer in Europe, then for Germany, I expect a small growth this year of 0.2%, given that Donald Trump is not crushing this calculation. Cross your fingers for me.
So we'll reset the timer. You managed to remain within the 1 minute that you had. Jonathan, it's your turn. What is the outlook for the UK? We already heard a bit of it. Can you expand a little bit more on what you expect for 2025?
Yeah, so to go a bit wider, so across my region, I'd say that generally speaking, we are looking at improved demand. That's both household spending, similar reasons, but actually also increased government spending and investment across most of those countries. So that's a really positive thing. More on the EU, I do think we'll have improved EU-UK relations. I think we can start with discussing defense, but I actually think the government will be slightly more proactive there, especially to stimulate some more growth. On a domestic level, we are seeing some pretty important policies this year. Hopefully a planning bill that will stimulate the construction sector, industrial policy that will improve investment sentiment. And then lastly, and I'm going to be an optimist here, I don't think the Trump risk is as bad for the UK as for other countries. But that feels like a risky one to say, but I'm going to go for it.
Risky bets to try to predict what Trump is going to do. So Marcos, your turn. What is the outlook for the US? A lot of uncertainties, we heard it. So what is the baseline for the US?
Yeah, as I said, a very well-oiled machine when we're talking about the economy. I think we're still going to get pretty decent growth, healthy growth between 2 and 2.5%. This is all still working very well. But there are a lot of these reasons to be worried. I don't know if about 2025, because it's hard to know, how fast these things take to transmit to the economy. But he's going about it. He's being very quick with his policy and very aggressive. And like I said, the way he's treating Mexico, even if he didn't do the tariffs, and just how he's going about with the world, like they stand to make a lot of enemies, really, and alienate themselves. And they're convinced, they're very optimistic that they can do everything by themselves. But as I said, I don't know that that's the case. So I'm confident about the economy, worried about society, and worried about diplomacy.
Okay, very good summary. Bernard, I'll raise the bar of the challenge. had 1 minute to talk about a handful of countries. You have a bit more countries in Asia Pacific. So what is your outlook for advanced economies in your region?
I'll do my best in 1 minute. So in 2024, resilient trade performance has really been a cornerstone for Asia's economic growth. But as everyone knows, global economic policy uncertainty has been on the rise, and that's mainly reflecting the expectations that we are going to see more trade policy frictions this year, or maybe for the next 4 years. And this means that we're expecting slower manufacturing and trade-related activity. And what does this mean for advanced Asia economies in 2025? The export-oriented economies like your South Korea, Taiwan, Singapore, we are expecting them to show lower growth this year, slower growth this year. But for Japan, because they didn't do so well in 2024, they're pretty much stagnant. We're expecting them to show a bit of rebound, mainly because we're expecting a recovery in the consumer spending, corporate investments to sort of offset that any weakness in Japanese exports.
Thank you, Bernard. And thanks to the 4 of you. Great timing, Bernard. Thanks for your attention. Thanks to our 4 panelists for their wonderful insights, and enjoy the rest of your morning with us. Thank you.